Welcome. In this video, Zbcn coin broke the downtrend. Is the pump starting? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
There was a descending trend line like this, and the price broke above it and is now rising. This is quite significant in technical analysis and is often a signal that market psychology is changing. A descending trend is a price movement pattern in which the price consistently forms lower highs and lower lows. This structure indicates that sellers dominate the market and that buyers are weak in pushing the price upward. However, when this trend is broken, it signals that buyers are regaining strength and an upward momentum is starting in the market. It means lower highs are no longer being made, indicating that the downward pressure is weakening. There are some technical details that should be considered during trend breakouts. First, it's important to observe whether the breakout is supported by volume. If there is a significant increase in trading volume as the price breaks above the descending trend line, it means the breakout is stronger and more reliable. This is because it shows that many investors are opening long positions at the same time. Breakouts without volume can often be traps, and the price may fall back into the trend. Therefore, investors should pay attention not only to the price structure during the breakout, but also to trading volume. This is very important for reliable analysis. After the price breaks the descending trend, a retest move is often observed. This means the broken trend line is tested again. If the price returns to this trend line, finds support there, and then rises again, it confirms the breakup. Such retests can provide buying opportunities for investors because the risk is lower and the validity of the breakout is confirmed. Without a retest, there is a higher risk that the price may turn back down. Upward reactions after a retest generally indicate increased buying pressure. There was a descending trend like this, and the price broke above it and is now rising. This is quite significant in technical analysis and is often a signal that market psychology is changing. A descending trend is a price movement pattern in which the price consistently forms lower highs and lower lows. This structure indicates that sellers dominate the market and that buyers are weak in pushing the price upward. However, when this trend is broken, it signals that buyers are regaining strength and an upward momentum is starting in the market. It means lower highs are no longer being made, indicating that the downward pressure is weakening. There are some technical details that should be considered during trend breakouts. First, it's important to observe whether the breakout is supported by volume. If there is a significant increase in trading volume as the price breaks above the descending trend line, it means the breakout is stronger and more reliable. This is because it shows that many investors are opening long positions at the same time. Breakouts without volume can often lead traps, and the price may fall back into the trend. Therefore, investors should pay attention not only to the price structure during the breakout, but also to trading volume. This is very important for reliable analysis. After the price breaks the descending trend, a retest move is often observed. This means the broken trend line is tested again. If the price returns to this trend line, finds support there, and then rises again, it confirms the breakout. Such retests can provide buying opportunities for investors because the risk is lower and the validity of the breakout is confirmed. Without a retest, there is a higher risk that the price may turn back down. Upward reactions after a retest generally indicate increased buying pressure. But we can't base analysis on trend lines alone. Let's also take a look at other metrics. Stay tuned.
The formation of higher lows and higher highs is considered a very strong bullish signal in technical analysis. This type of structure indicates that the market is evolving upward in that buyers are gradually gaining more strength. In other words, each new pullback ends at a higher level than the previous one, and each new peak is formed above the last. This suggests growing confidence in the market and shows that investors believe prices will rise further. Buyers are entering the market without waiting for previous low levels, which is a sign of strong demand. At the same time, it also means that sellers are weakening as those who previously took profits at certain high levels now hesitate when those levels are easily surpassed. This psychological shift lays a crucial foundation for the continuation of the trend. The higher low and higher high structure essentially reveals the internal dynamics of the market. When each new low remains above the previous one, it creates a favorable outlook for investors. Especially for those who focus on technical analysis, the recognition of such structures increases market confidence and strengthens the tendency to open long positions. Naturally, this puts upward pressure on the price. As more buy orders are placed, the market rises with the increasing demand. Furthermore, higher lows also indicate that the market's support level is shifting upward. That means with every pullback, investors begin to set new buying levels above the previous support. This is one of the fundamental building blocks of a solid uptrend. On the other hand, the formation of higher highs is just as important as higher lows. The fact that each new peak is higher than the previous one indicates that the supply-demand balance is shifting in favor of buyers. This is a reflection of growing optimism among investors. Especially when these higher highs are accompanied by strong volume, it may signal that the upward trend could accelerate further. As the price rises, an increase in volume indicates that this is not just a speculative spike, but the result of strong market interest. Price increases without volume are often considered short-term reactions, while volume-supported movements with higher low and high formations lay the foundation for long-term uptrends. This structure is also critical from a psychological perspective. When a sense of confidence is established in the market, even investors who previously hesitated due to falling prices begin to take positions. This attracts new buyers and increases price momentum. Meanwhile, investors who were expecting a decline and held short positions start to close them as their expectations are invalidated, triggering what is known as a short squeeze, a rapid price increase that further reinforces the strength of the higher low and high formations. Additionally, the time frame in which this structure appears is also important. If it is observed on daily, weekly, or even higher time frames, it suggests that larger investor groups are involved and the upward movement may be more sustainable. While higher low-high structures seen on shorter time frames are mostly used by short-term traders, those observed on broader time frames provide stronger signals for long-term investors. Especially when such a structure is identified on a weekly chart, it is considered a significant indication that the price may reach much higher levels in the future. Higher low-high formations also help redefine support and resistance levels. Previous peak levels become new support zones. This offers investors new buying opportunities. In technical analysis, this is called a role reversal, where a previously unbreakable resistance is now surpassed and begins to act as support. Buying from this support helps the price rise again, continuing the bullish cycle. In such a scenario, there are many reasons for the market to continue moving upward. When these structures repeat multiple times, the trend becomes more stable and investor confidence grows even stronger. This structure also aligns with pattern-based analysis. For example, this higher low, high formation may set the groundwork for patterns like an ascending channel or bullish flag. These patterns also define target prices and help investors determine when to exit a position. If these patterns remain unbroken, the price can continue its upward movement steadily. Such a trend could even mark the beginning of a large-scale bull market. In conclusion, the higher low and high structure signals a significant shift in the market, both technically and psychologically. It implies that the upward price movement may not be temporary but rather lasting, especially when accompanied by increased volume, positive indicator signals, and strong support levels. This structure suggests that the rally could be long-lasting. For investors who pay attention to this kind of analysis, the higher low and high structure can serve as a signal to enter a position as well as to protect existing ones and set new targets. Therefore, monitoring and evaluating the structure with the right strategies forms the foundation of a successful technical analysis. No matter how complex the market seems, clear and reliable structures like the higher low and high formation provide guidance for investors. How long this light shines depends on how investors interpret and act on this signal.
MACD is one of the most popular technical analysis tools used to determine momentum and the direction of trends in the markets. Frequently used in cryptocurrency markets, stocks, and commodity trading, this indicator provides investors with valuable insights into the strength and direction behind price movements. MACD works by analyzing the relationship between two different exponential moving averages, or EMAs. Typically, the MACD line is calculated by subtracting the 26-day long-term EMA from the 12-day short-term EMA. In addition to this MACD line, there is usually a signal line, which is a 9-day EMA and moves more slowly than the MACD line. The relationship between these two lines, especially their crossovers, provides crucial buy or sell signals for investors. When the MACD lines begin to move upward, especially with the support of the signal line and increasing volume, it signals strengthening in the market. This type of upward momentum indicates that the market is gaining positive strength and often leads to price increases as well. The rise in the MACD lines shows that the short-term average is increasing faster than the long-term average. This implies growing investor confidence, more buy orders entering the market, and a shift in overall market sentiment in a positive direction. In other words, a rising MACD is a technical confirmation that prices are starting to increase. This rise may not just be a short-term reaction, but the beginning of a larger trend.
If the MACD line crosses above the signal line from below, this is generally referred to as a bullish crossover. If this crossover occurs above the zero level, the horizontal axis of the MACD, it is considered an even stronger bullish signal. That's because a crossover above zero confirms that both momentum and trend are turning in favor of the investor. Currently, the continued rise of the MACD lines suggests a positive transformation is occurring beneath the surface of the market, and prices may start to move upward in response. This type of structure typically indicates the end of a consolidation period or the beginning of a new upward wave. Especially in markets that have been moving sideways or downward for an extended period, an upward slope in the MACD lines signals a shift in investor psychology and an increase in buying pressure. This change leads to rising prices. Alongside the rising MACD lines, the histogram bars may also begin to climb above the zero line or expand upward. These histogram bars represent the difference between the MACD and the signal line and show the strength of momentum. The longer the bars, the stronger the momentum. Therefore, the increase in histogram bars along with rising lines is another technical indicator showing acceleration in the uptrend. This usually precedes a sharp and strong upward move in price. This positive trend in the MACD lines serves as an encouraging signal for investors to enter long positions. Technically, it indicates that the price may have completed its downward correction and could be entering a new uptrend. Especially when the MACD shifts from negative territory to positive, it is a strong technical indication of a major market reversal. It also shows that investors are regaining confidence in the market, which is reflected in the price. The continued upward movement of the MACD lines also shows that many technical analysis strategies are being restructured in a bullish direction. For instance, prices that were previously stuck at resistance levels may break through and reach new highs in response to these technical signals. Especially signals like MACD, which are lagging but reliable, are used to confirm the strength of a trend. At this point, the alignment of price movements with the direction indicated by the MACD shows that the analysis is based on solid foundations and boosts investor confidence. Additionally, the consistent upward movement of the MACD lines suggests a similar bullish expectation in higher timeframes as well. That's because the MACD's movement generally reflects not just short-term, but also medium and long-term trends. This means investors may aim not only for short-term profits, but also for larger gains by holding positions longer. In summary, the ongoing upward trend in the MACD indicator lines is one of the most reliable technical signals of bullish market potential. This structure forms a strong foundation for upward price movements. Especially when combined with rising volume, positive market news, or a supporting overall trend, it can lead to major price jumps. Therefore, this MACD uptrend should be closely monitored and evaluated alongside price movements. Success in technical analysis depends on timely recognition of such strong signals and their strategic interpretation. Currently, this upward movement in the MACD lines is on the radar of many technical traders and is being interpreted as a sign of potential bullish momentum. Especially if the price breaks new resistance levels in line with this technical structure, it will further validate the analysis and provide confidence to investors. Therefore, this positive MACD outlook should be watched carefully and appropriate strategies should be developed to capture deeper gains. As the lines go up, the price follows.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.